Good morning, good afternoon, good evening. My name is Jesse Lin, and I work on the digital trade team at the World Economic Forum. I just want to first begin to thank everyone that's dialed in for taking the time to attend this virtual panel. I hope that everyone is staying safe and healthy during this pandemic. Of course, that's the #1 priority. So a few points before we get started. So first, welcome to the event. Please note that the first thing is we encourage you to change your name in the Zoom webinar chat to the organization in the participant box, your name and organization, so we know who you are. Second point is all participants are muted. But you can interact with us through two ways. First, there is a chat that you can message the panelists. And second, you will have also a Q&A function. So that's a function that you can also type in any questions that you have in addition to raising your hand. We encourage you to participate in our polls during the panel. We'll have multiple polls. Please be aware that if your internet connection is slow, or if you're using different clients of Zoom, particularly if you're calling in, you may not be able to vote, but at least we will be reading out the question in full as well as the responses. Depending on the version and application of Zoom that you have, some of the functions you might not have. So if you're calling in, you're not likely to have the question answering function or raising your hand, possibly. And lastly, the first hour of the panel will be recorded and available after this virtual panel. We will also have a 15 minutes off the record session at the end of the panel, and Chatham House will supply for the duration of this panel and the extra 15 minutes. And with that, I would like to pass the mic to Yen, who is the moderator of the panel.
Good morning, good afternoon, and good evening, everyone. Welcome to the panel for enabling digital payments during COVID-19. I'm Yan Xia. I'm the project lead of Digital Trade Team covering cross-border digital payments. I would like to introduce you members of our team first. Jesse, can you move on to the next slide? So we have Xian Fan, head of digital trade, Mike Geller, fellow from Visa, and Jesse Lin, our project specialist. And before we dive into today's topic, we would like to run a very quick poll. We are very curious as to which region you represent. And Jesse, could you please poll the poll? We will let the poll to run for a few minutes.
Thanks, Yen. I'm launching the poll now.
Great, thank you. So I think no matter where you are today, you are probably being asked to stay at home in order to prevent the spread of the virus. And I'm sure that at some point you have already ordered grocery online. You are probably have been watching Netflix online, and very possibly you have seen a doctor online. None of those online activities can be made possible without digital payments. COVID-19 has accelerated the digitization of the global economy and also global trade. However, unfortunately, today we still have 1.7 billion unbanked populations, and most of them actually located in developing countries and less developed countries. Without access to digital payments, people are having a hard time to prevent themselves to limit the spread of the virus. And without access to digital payments, it also prevents people from further participating in global trade. World Economic Forum here, we are dedicated to promote equality and financial inclusion. Our cross-border digital payments team, together with Ashley Landquist from blockchain team and Drew Prompson from the financial services team, we are here together to try to tackle this issue from multiple fronts. So today we want to use this opportunity to kick off our toolkit project. The mission of our toolkit project is to find the core enabling factors for digital payments from both the domestic and cross-border for the unbanked population. And we want to draw lessons learned from the developing and less developed countries who have succeeded in this endeavor. So now I will introduce our panelists. First, I would like to introduce Ms. Sohini Rajula, Head of Network of APAC and Middle East for Western Union, and Mr. Mauricio Santos, founding partner of Siscom Bahia, a leading law firm in Brazil, and Martin Chopenza, a fellow from Peterson Institute of International Economics, and Laura Perez, Senior Engagement Manager from Senfree, a nonprofit think tank focusing on financial inclusion. So we will start the panel discussion, and my first question to the panelists are, what other roles have you seen digital payment played in your respective region? I will start with Sohili first.
Thank you, Yan. So at Western Union, we move money across borders. More than about 150 million of our customers trust us to move money. And that money can be for individuals, largely is for individuals, but we also cater to a business population. So for us, it is the same amount of passion, whether we're moving $300 or $300,000 or even $3 million. And when you look at the COVID situation, you rightly pointed out in your introduction, what that has meant is basically restriction of movement and limitations on physical co-presence. So definitely what's required is for all businesses or all activities and services to have some kind of remote enablement. So that's exactly the challenge, just like every other business, that's been the challenge even for Western Union. To begin with, it's, we have our digital presence in more than 75 countries. And we, as a Western Union, we also have access to mobile wallets in a lot of countries. We have access to more than 3 billion bank accounts in more than 100 countries. So there is this combination which was already growing very fast, and that kind of super accelerated. We saw that accelerate much more than what it was doing in its normal course during the COVID-19.
Thank you, Sohini. I think at this point, it is very important for people who rely on remittance to actually have the remote access digitally in order to receive money from their relatives abroad. So I think I will turn to Martin next. I think, Martin, you are writing a book about China and the digital payments there. I think in 2003, China actually went through a pandemic. Probably you can give us a comparison between now and 2003.
Absolutely. So actually, many of the most important products for fintech in China and also for e-commerce were born in 2003 as SARS swept through. That led a lot of people for the first time to try using online rather than going in person. And many of them decided not to go back to buying those things in person that they used to. In this specific case, what you've had is contactless deliveries, quite easy to do when there's no cash or no need to swipe. It used to be, even just a few years ago, people would pay for many of their products that they bought online in person. They wanted to see them, but Alipay has eliminated that need. So it's allowed people to stay in quarantine a lot more. The fintech apps are now so ubiquitous in China that the government has actually used them as the distribution mechanism. It's you open up your Alipay app to get the QR code, which allows you to get around the country and show that you haven't been to a COVID hotspot, you haven't been around anybody who's infected. Local governments have used it to distribute stimulus payments so that people are able to spend right away rather than saving them, because they give them in the form of vouchers that interact with the digital wallets. And then finally, now that the economy has largely reopened, the risk of infection is lower now that people are using the QR code methods. You don't have to touch a card, you don't have to touch cash, you don't have to touch any touch screen. There are no POS machines that people have to handle. You can just do it all through scanning, and that has helped them probably have less of a risk of a second wave as other countries.
Thank you very much, Martin. I think China has been leading digital payment, especially mobile payments. And I think Brazil is another leading country in the digital payments field. So I will turn to Mauricio and talk about the situation in Brazil now.
Okay, thank you very much. Thank you for the opportunity to be here. In Brazil, we have a problem of the unbanked population, which represents nowadays about 60 million people in the economic active population. But on the other hand, we have a recognition of the Brazilian authorities of the importance of digital payments. So the Brazilian government has announced some stimulus payments or packages to small and medium-sized companies, and they are relying a lot on fintechs. So there is a recognition that the current incumbents are not able to reach the entire population. On one hand, you have state-owned banks trying to launch digital accounts for the individuals, but on the other hand, when you talk about financings to SMEs, the central bank has recognized the weakness of the current incumbents to make the money reach the last mile. And as a result of that, the Brazilian government is now passing rules to allow fintechs to bridge that important portion of the economy.
Thank you very much, Mauricio. I think right now it's very important for the governments to act fast in order for the money to reach, especially to the unbanked population as soon as possible. I think next I will turn to Laura. I think Nigeria and Kenya has also been a great representative in leading the digital payments. And probably can you share a little bit more about what's happening in Africa?
Yes, hello everyone. So speaking about Africa, I would like first to mention that cash is still king in Africa. When we speak about digital payments, it's mostly mobile money, and we need to admit that mobile money has an amazing growth in the continent, and it has quite an amazing penetration in many of the countries, like Kenya, for example. But when you take a closer look at what it means, you can see that peer-to-peer, mostly remittances, it's widely digitized in many countries, but then other use cases like paying for your bills, paying for your groceries, P2B, B2B, G2P, and all others are mostly and predominantly done in cash still. So on the one hand, digitizing payments is becoming quite crucial in these days in the COVID pandemic to try to stop the spread, because it's been proven that banknotes keep the virus for, I don't know, 3 or 4 days. Even coins keep the virus for a couple of hours, and it's proven to become like an important vector for the disease. So how to encourage people to use more digital payments, it's been one of the policy responses that it's been currently discussed in the continent. And the second important factor is that Africa is pretty much reliant on remittances. Remittances have a very important role in the economy. Finding ways of keeping digital payments, digital remittances flowing into the continent will be very important to mitigate the economic downturn that will most probably happen. We see that if we take a look at the private crisis in 2008, the flow of remittances clearly decreased. And so we need to see in the current scenario where many European countries are in lockdown, where many jobs are being lost, how to encourage formal remittances coming into the continent. Those would be like the two main areas why digital payments are important for Africa.
Thank you very much, Laura. I think we will go into our second question, and I would like each panelist to talk about the challenges they are facing, particularly from the infrastructural perspective, and also the possible solutions from the policy and technology aspects. Given that the last topic we just talked about, Laura has emphasized on remittance, I think I will start with Sohili as well.
Thank you again, Yan. So yeah, when we talk about the challenges, I think it is right to say that our customers need to move money more so now because there are families back home that depend on sustenance, and I would say there's an increasing need for remote enablement. I think the key challenge that the world faces on enabling digital payments is what you mentioned initially about the fact that there is a bridge and you need to be able to, there's a divide, sorry, and you need a bridge to be able to, ensure that there is a hybrid solution which can connect the banked and the digitally savvy customers on one end, and maybe the receivers. If the sender may be somebody who is a, super savvy software engineer, but he may have family back home which is not so technologically advanced, and you need to be able to create a solution which can be a hybrid solution. And there's no one size, there's no one this ideal ultimate digital solution which can serve the purpose of all kinds of customer segments across different countries. I know we have here representation from different parts of the world. So that's been the key challenge, I would say. When we look at Western Union, when we realize that we have to be able to ensure that we are, during these challenging times, be present and be able to ensure that our customers, with whatever be the different kind of limitations, are able to send money across borders. We kind of came up with 3 large projects in addition to what we already have. So there is, for our customers, there's already VU.com in more than 70, 75 countries. There's an app. You can, those solutions exist, but there is still a very large population and in developed and developing countries. It's not as if in developed countries, everybody is on the app, and in developing country, everybody is taking cash. It's a mix because there are all kinds of customer segments. So we asked ourselves the question, what can we do to ensure that we can remotely enable digital transactions for everyone who was so far not comfortable with using digital channels? And we came up with 3 different sets of solutions which cater to different parts of the world, different kinds of customers and different markets. And our biggest initiative there has been what we call digital locations. So it is a location. So for our customers, it's hugely, I would say, it's a matter of comfort for them to walk into a yellow and black Western Union branded location. They have the trust and the reliability that the money is going to get where it needs to get. So we named this initiative Digital Location, and we have 2 branches of that. So for many of our countries, and we've actually launched the first phase in 4 of the EU countries, where a customer may not be using our VU.com or our app, but they can call in and have the entire process as if it was they were doing it. So it is remotely assisting them on a digital transaction. So that is one type of digital locations that we have enabled. We also found during this time that a large number of our agents and our partners who were typically serving our customers on the retail side also came up and said, hey, we want to be the digital enablers of these transactions as well. So can you come up with a new process, new guidelines, where customers can call into us and we can handhold them to be able to remotely process the transaction? And those type of locations are what we've rolled out in a couple of countries in Middle East. We've also rolled them out. We are in the process of doing it in APAC. We also have a few that are coming out in LACA. So I think that's going to be the biggest initiative. 2 other things which are very limited or have specific use cases are in the eKYC, expanding eKYC with regulators, because that's the biggest challenge for a cross-border transaction. And the third, where it is possible and permissible to enable home delivery. So the customer, this is more on the receive side, where the customer, because of restrictions on movement, is not able to come to the location, but you get the cash delivered to their residence. There's a bunch of other initiatives, but I think the crux of it is to be able to ensure you can remotely enable every kind of customer segment to do a digital transaction.
Yeah, thank you very much, Sohili. I think one thing you have noted correctly is that the world is actually very fragmented. I think people in different countries have different means towards the financial institutions. I think sometimes we rely on money, cash, sometimes rely on mobile payments, and possibly sometimes it's through other kind of innovations. So I think one thing I want to note is that Sohili, you pointed out the importance of eKYC, and we are actually working on putting together a white paper to address the best practices of the cross-border digital payments. And one of the things we emphasize is to have a standard for eKYC, and our paper will be out very soon in May. I think I will probably turn it to Laura to talk about the challenges in Africa.
Yes, so Africa has a number of structural challenges, and I would like to warn about the idea of thinking that the payments digitization to respond to the COVID pandemic is going to solve them all, because we're talking about the structural matters that are taking decades to solve. In the case of the African continent, for example, we're talking about a small and fragmented national payment system that hardly reached the scale to become viable, lack of interoperability between articulation issues, because we have identified, for example, that agents do not really get into really rural, distant areas, and people still have the need to change between cash and digital value and convert one into the other. In the case of Africa as well, we can mention the lack of a forex exchange market. There's a hard dependency on hard currencies, which in the current state of currency volatility will actually make trade more difficult and will definitely increase the cost of remittances. There's also the problem of ID. Many people not being able to open an account because they don't even have the document that an institution may require to open an account. So these are structural issues that may take longer, and governments are still thinking, and policymakers, how to make quick responses that still can facilitate the adoption of digital payments. And there are things that can be done. In fact, I think this may be a good opportunity to work at both levels, both short-term immediate actions to try to mitigate the effect of the COVID pandemic, and then maybe taking this opportunity to work on those medium-term, longer-term structural changes that are needed in the continent to pave the way to make the payment system stronger. So how African policymakers and regulators are actually responding to this situation, it's mostly through 2-3 kind of interventions. We see countries like Kenya, Uganda, Rwanda, Ghana, I may be leaving some others, but those were the first movers for sure. It's removal of fees for mobile money, because remember we said that in Africa mobile money is the more widespread channel people use in terms of payments digitization. So the idea is try to encourage people to use mobile money for everyday transactions. And the same for the tariffs, because in the past few years some governments, some countries have established some tariffs on the use of mobile money. There's been great debates around the convenience of doing so. It may discourage people from using mobile money, and this is like the best example of how they quickly remove those tariffs in order to promote those digital payments. And the second one, which is also an interesting, which goes in the direction of widening or deepening the risk-based approach, has been on relaxing the limits in terms of daily balance or amount per transactions that people can operate through mobile money, so that there's a risk-based approach in which transactions that are not considered systemically important or high risk of AML/CFT can still be transacting and operating until up to certain limits. So we will speak later, I think, but I think those responses go in the right direction. And the question would be whether we can also take the opportunity to work on other more structural changes that are also needed that I mentioned, like the foreign exchange or the digital ID, that could be a good solution in the medium term?
Thank you very much, Laura. I think you mentioned something that's very important, which is about the ID. I think lacking of a formal identification in many countries is actually quite a big issue, especially in the developing and less developed countries. So I think next one I will turn to Martin. Maybe you can share some insights as to how Chinese government has been addressing those issues in the short term and then also the medium term in the past.
Yeah, so one of the interesting things about China is that it's so far ahead in many ways in terms of adoption of digital payments that the challenges are mostly past them. On the identity side, one of the most important elements was that virtually everybody in China has a national ID number, and that helps them lead to a much higher rate of bank account penetration than in many other countries. So once people had bank accounts, then it was much easier to move money in and out of mobile wallets. Without such bank penetration, Alipay, for example, would have had to build up a large network of agents around the country. That would have made it more difficult to scale, would have raised fraud, and been quite an impediment. Actually, the bank account plus the mobile phone number ended up being the main way that people identified themselves and linked a bank account to their Alipay wallet. So in a way, the KYC was farmed out from the mobile payment providers to the banks. That was extremely important. So some other areas of infrastructure that were important is the interbank payment system, which allowed Alipay to process payments across. There's generally this misconception that in China, the banks didn't really care about Alipay. They didn't want to work with Alipay. But in fact, the banks were really critical to its success from the very beginning. Already in the mid-2000s, it partnered with ICBC, but the payment system was really clunky. So what you had to do was actually go to the bank, make a wire transfer to Hangzhou, and then fax your receipt from that payment and to Alipay in Hangzhou, and then they would manually check and make sure the money had arrived in their account and then process it. And on the back end, ICBC, Alipay had to send a payment to them and then had to be printed out on paper and then manually entered by a person into the PBOC's, the Central Bank of China's interbank payment system. And that obviously led to a lot of errors. It was slow. The printer at one point, they were worried it was going to catch on fire because there were so many payments. But then this was updated by the PBOC around 2010. And that allowed them to build the kind of system that we have in many Western countries, which is the pull payments, where you just enter your payment details once, and then the money can be pulled from your bank account rather than having to log into your banking and push a payment each time. So the government has been really a key supporter, both in building the infrastructure and making sure that everything from mobile internet was available consistently and cheaply, to the interbank payment system, and encouraging through relatively limited regulation. And when the previous monopoly, UnionPay, tried to block and destroy Alipay's ability to disrupt it, the central bank ended up protecting it. And I think that was a really critical moment. That was around 2013, 2014, which allowed mobile payments to get where they are. So you look at what they've created, it's quite extraordinary, but it's not just a creation of the tech companies. It was really the government and the banks that helped make it possible.
Thank you very much, Martin. I think the encouragement from the government is definitely very important to make sure that they have the right policy in place to promote the fintech. So I'm curious to learn more from the Brazil. Mauricio, could you please share the perspective from Brazil?
Sure. In Brazil, identity is also not a problem. As in China, virtually every single Brazilian citizen has an identity, so that's not an issue. I think that there are three main challenges in Brazil. The first challenge is interoperability. As you have a market dominated by 5 or 6 retail banks, these banks, each bank has its own ATM network. So it's very difficult for fintechs or for newcomers to give access to cash. I forgot to mention in the previous answer that in Brazil, population predominantly uses cash to pay the bills. That is changing slowly, but we still rely a lot on cash. So that is one problem. ATMs are owned by the incumbents. Now, the central bank is starting now a new debate to open access to the ATMs to have and to eliminate those hurdles. The second important challenge here, is still looking at the incumbents, is the technical barriers that the incumbents impose. I would like to use an example of Nubank. Nubank is a digital bank, one of the largest digital banks in the world. It's a Brazilian bank. They have approximately 20 million clients. And at the beginning, when they started their activities, the incumbents refused to give integration to Nubank. So the systems could not be integrated. And that was a major hurdle for the development of digital payments. The banks, the incumbents were not forced to improve their services, and you have banks offering a high quality product. They were facing those technical barriers. And as a result of that, what we had was there are two main cases of fintechs in Brazil. Nubank is one of these fintechs. Then you have Stone, which is a company involving in the acquiring business. They both had to file complaints to the antitrust authorities. So this is still a big issue here. Now, the central bank is discussing the concept of open banking. My question is, will the incumbents give access? How will access to information be provided by the incumbents? And the central bank has now created a forum inviting people from the different segments, from fintechs, from the incumbents, to discuss how to implement the open banking sector, the open banking concept. And the last issue, as Brazil is a large country, we still have the problem of network coverage in remote areas. They are not densely populated. You go to the Amazon region, there are not many people living there, but you can clearly see that the coverage is pretty much focused on the large areas of the most populated areas of Brazil. But when you look at the countryside, the coverage is far from ideal. So I would say that these are the three main challenges here nowadays.
Thank you very much, Mauricio. I think indeed, I think internet is one of the biggest issues around the world today. I think sometimes even in the United States, we don't really have the good internet reception, especially right now when we're working from home. I think internet also becomes a big challenge. So I think right now we will run the second poll. So we kind of want to understand from our audience, based on your experience in the region you cover, what kind of key obstacles you are facing in order to promote digital payments. And we will let the poll run for a minute or two. And meanwhile, we will go to our third questions, and I would like all the panelists to maybe highlight a few key recommendations to the policymakers. I'll actually start with Mauricio first at this time.
Oh, sorry. No, made some confusion with the buttons here. No, I think my key recommendation, you can have maybe the best ideas in the world. You can implement open banking. You can improve the security of the system, implement eKYC. So I think that's absolutely crucial. But my recommendation would be for authorities to look at the behavior, the current behavior of incumbents, because even if you have the best rules and you're not able to enforce the need for interoperability, for non-creation of barriers, as I mentioned before, I think your rules will not achieve the intended goals. So that's a different perspective. I would say more empirical analysis here. Look at the incumbents, look at the practices.
Thank you, Mauricio. I think it's very important to have the competition. I think next one I will go to Sohili.
Thank you, Jan. I think the key will be for what we have found in our experience, particularly with rolling out the digital locations, has been the receptiveness of regulators. And they've been receptive to say, okay, here is a new way. Maybe we asked for a particular process in the past, but given the COVID situation, that's not possible. So they've been very, very receptive in the new processes with the kind of checks and balances that an organization like Western Union can build into the process. And I'm just hoping that this is not just a stopgap because COVID is here and countries are in lockdown solution, but this openness of approach continues beyond, because that's really what will make the difference. I think that's what is going to also change behavior. That will have a kind of ripple effect, which can truly change and make digital really accessible for a much larger population. If we can just remove some of these impediments in a more long-lasting manner.
Yeah, thank you very much, Sohili. I think I will move to Laura next.
Yes, so I will frame my recommendations on the short term and in the medium term, thinking about the current pandemic that we're going through. In the short term, first, I think the policy response in Africa is going in the right direction. I think removing fees, sounds like a correct decision, so that because mobile money business model is costly for everyday transactions, it's very difficult to imagine people spending such high amounts on their everyday expenses. And deepening the DIS-based approach, it's also the right thing to do, like taking into account people whose profile is definitely not systemically or structurally threatening to the system. We're talking about small amounts, small limits that actually pose no threat to the system. So that's definitely positive. I think there might be some literacy campaigns that may be needed because behavior is sticky. If we're used to using cash, it's very difficult to move away and start using any new channel. So I think there will be some campaigns that will be needed. And also in the short term, I think we need to cover the data gap, because policymakers are trying to do their best with a big data hole. And if we wait for central banks to publish their data, that's going to take too long. And this pandemic is evolving really quick. So we might need to have creative or alternative methods to gather the data we need to be able to identify the corridors where the COVID is actually impacting more on the economy, where digital payments may actually play a greater role. That's on the short term. And then I think there's an opportunity to work on the medium and longer term. And I think there are two areas for Africa that are quite essential, and I would love to see progress made. One is on identity, not only because there are 400 million Africans who do not have a foundational ID, but also because those who do have, there's an issue around convenience. It's also around having a friendly or user-friendly ID proxy that allows people to engage seamlessly with the payment system and with the economy as a whole. So there's QR codes that have been super successful in Asia. It's time to see whether they can also work in Africa, for example. And the second long-term measure I would love to see, it's on the Forex market. Africa is probably the only continent with so high dependency on hard currency because there's no local-to-local market, very restrained offer. And that creates a fragility and weakness of African trade and African flows. And there's ways to take a look at this now where creating independence from hard currency is going to support governments who already see their reserves being lowered So there's, yeah.
Great, thank you very much, Laura. I think it's great for you to break it down into short-term and long-term solutions. I do agree that having a different levels of KYC requirements would really help in countries where cash is still the king. And I think the last one I would turn to Martin.
Great. So I would say the main recommendation would be to focus on the ecosystem. One of the things we've learned from China is that you can't really build, and what I've learned in comparing China to other countries is that these systems don't seem to get the kind of returns across the economy that we hope in terms of both adoption and impact, unless there's a large ecosystem built around a mobile payments, digital payments system. So if you, for example, it's quite difficult to get all of the merchants and the consumers together. One way that it worked really well in China, I think other countries can do the same. Also looking at Kenya, for example, look at the firms in your country that have a lot of customers requiring it to pay, especially with a presence in rural areas, and see if they can become partners with the banks to build out these digital payment systems. And if they have a large enough share of the market, then that can really help get things off the ground in the shorter term. And if you think about it, payments is really just a base layer. It's the more boring and seamless the payments are, the less people have to think about it, the better. That's one of the reasons QR codes were so helpful, is that people could just use the smartphones they already had. They didn't have to buy a separate POS machine. And that really helped adoption on the, especially for small businesses. But in the longer term, there should be a lot of thought about interoperability. You want these firms to build this and get it off the ground. They're not going to necessarily want it to be interoperable, but you might want to look at what elements need to be done by the government, like in China, the interbank payment system, which allows interoperability, and which part can be built by a private firm.
Thank you very much, Martin. I think before we go into Q&A, we will probably do a show some poll results. Jesse, could you please help poll the first poll first?
Sure, Yan. Yeah, I'll show the results now for the first poll.
All right, great. So today we actually have a lot of participants from Asia that represents 53%, and then also people from North America, and then 22% from South America, and 31% from Europe, and then 19% Middle East, and 28% Africa, and Oceania for 17%. Thank you, Jesse. Can we show the poll result for the second question?
Showing the results now. Thanks, Yan.
All right, let's see what people think are the key obstacles. I think the number one is the lack of interoperability with the banking system. And then the number two is actually about identity. And then for the rest of the results are pretty much very equal in terms of number. There's the network availability, agency network, cost of devices, and de-risking issues with correspondent banks, and also the local standard being far away from the international standard. So again, I want to thank you very much for participating in our polls. And I think right now we'll open up for the question and answer session. So let me turn to the Q&A session. So the first question actually goes to Sohili. I think our audience is asking Western Union to identify as a major financial choke point in the modern economy. How is Western Union editing its transaction surveillance mechanism to take into account new terrorist and criminal financing in the age of COVID-19?
And I think that's a great question, actually. So yes, we are talking about the need for genuine customers to have digital transactions, or ensure that the transaction can go across borders. But you're absolutely right. Any crisis, the fraudsters, the criminals are always one step ahead. I think what helps there is the deep experience that Western Union has. Our algorithms are complex, and even within COVID times, the basic underlying thing that a criminal is trying to do is very similar. They may use COVID instead of what used to be earlier called, say, call center or grandpa schemes or romance scams. Now there can be somebody who's trying to use the COVID situation to maybe dupe genuine customers or have a transaction which is not the genuine and the right transaction that would do the rails. So it's those same algorithms that need to be modified to be able to identify the different variables. So I'm not sure if that answers your question, but basically moving that same risk management engine to be able to identify new types of trends, and that's something which we have to keep doing. COVID is obviously a worldwide situation, but given that we operate in more than 200 countries and territories, some or the other countries keeps having some issue, and there are new kinds of scams that keep coming up. It's just that this time the scale is different, but the mechanism to be able to identify, track, and then stop those transactions is basically the same.
Thank you very much, Sohini. I think the AML and also sanctions monitoring, I think it's fundamental issues for all payments company. It doesn't really matter whether it's digital or it's traditional. So our next question is actually about what would be the most recommended digital payment solution in a country where mobile penetration is high, but smartphone is not very popular. QR code seems to be the easiest to implement, but what are the requirements and conditions? So I think Laura, maybe you can help answer this question.
Yes, well, first of all, if I think about an environment where mobile phones are widely spread, but not that much about smartphones, that can be the case of many African countries. And I would like to speak in the first place, before jumping into QR codes, about USSD, because this is still a very prevalent method for digital payments. As much as we think it's inconvenient or not user-friendly for many people, it's quite simple to just type the given code and send the money. And there's this huge debate about whether the future is in apps and a smartphone, or whether USSD will continue as the king. I think everyone agrees that as the smartphone penetration is increasing, we will see a growth in apps and other more sophisticated digital payments. But the truth is that as of today, even today, USSD are still growing in Africa. So I couldn't dismiss that payment method. And then, yes, QR codes is probably a good solution for an environment like that, because you can have either a static or dynamic QR codes. And a static QR code is an image that contains a number of pixels that are related to your identity. And the good thing is that you can even print your QR codes and use it as a merchant, so that the person in front of you, the customer, if they have a smartphone, they can take a picture of that image and make a payment. So that make it very convenient, because there's no investment in hardware for merchants. And that's why it's become quite popular in some places. You also have dynamic QR codes. They're more secure, because the system encrypts a token. But for those, you need two smartphones. But even a simple QR code and a static QR code can actually work well. And some people don't know that QR codes may even have the functionality of having the codes recording in your agenda and stored, so that you can recover the QR code and make those payments easily. So that to say that you always need to keep a balance between the robustness of your system and the accessibility and how convenient it is. And although QR codes are not as secure as other payments like NFC, for example, the fact that they're far more accessible and convenient, they may be a good trade-off, because they are robust enough. And we've seen the rise of those QR codes in Asia, for example.
Yeah, thank you very much, Laura. I think there's you have mentioned it very good that there's sometimes we have to do a trade-off between the convenience versus the risk. So I think I wonder whether, Martin, you would like to take the question on QR code as well, maybe add a little bit from your perspective as what you have seen in China.
Yeah, so QR codes are really great in China, mainly because of just how easy it is. Of course, you do need the smartphone, but there is a serious risk involved in using them that is not necessarily as prevalent with NFC. At the beginning, Alipay did use these static QR codes, so you could someone could take a picture of your QR code and then take money from your account over and over again. There were serious security issues. So what's really important when thinking about using QRs is, one, you have to have it tokenized, have to use that level of security. Second, you have to have really good security in your app, because somebody scanning a QR code can really easily get a virus in their, that attacks their phone, not COVID. But it's you can't actually, unlike a URL, you can't tell what exactly you're scanning and what code is in there, and that makes it problematic. So I think you have to have a really, really robust anti-fraud system and really know what you're doing if you're going to use QR, because otherwise the fraud risk is quite high.
Thank you very much, Martin. Our next question is from Rahul Rana from ICC. And he has two questions. I think the first question is to Mauricio. He's asking whether you can provide some further details on the Brazilian central bank recognition of the weakness of the incumbents in reaching last mile and the moves by the government to enable fintech to assist.
Sure. Brazil has historically showed maybe the highest interest rates in the world. And that everybody struggles here to understand why, but one of the reasons is that we have a highly concentrated market. So, and that leads to some issues here, especially now. Let's look at the COVID situation right now. When you have 6-7 banks dominating the credit, these banks are implementing even more restrictive policies to provide credit, higher interest rates. The central bank has been following this discussion. I had several meetings with the central bank representing international clients, potential incumbents, and they are now trying to foster innovation. Specifically, when we talk about the COVID situation, as I mentioned before, as you have local banks refusing to provide credit, despite credit lines announced by the central bank or by the National Development Bank for these emergency situations, the central we saw that the money was not reaching the last mile. So what the central bank said is, they said, look, we have fintechs. We have nowadays about 20 fintechs registered with the central bank. These fintechs were prevented from borrowing funds from the central bank or from the National Development Bank. So now let's authorize them to borrow funds from the National Development Bank to on-lend these funds to SMEs. So that was an initiative, a recognition that the incumbents, they have their limitations. And on the other hand, let's say a regulatory framework that is more flexible to fintechs, and then new regulatory changes introduced. They were announced 2 weeks or a week and a half ago, saying, look, now these fintechs, they may provide credit to the SMEs because the money was not arriving at those SMEs with incumbent banks. So that's one clear example here. There are other examples. Like, I remember in the past, whenever you had a company willing to set up business in Brazil, it was much faster to have all the governmental approvals for a company to set up its business. But on the other hand, it took like 3 months to have a bank account opened. with an incumbent bank. And that created a lot of frustration. So what the central bank did is they gave more flexibility for the fintechs. And nowadays, I'm investing in a fintech company now, and I helped them to open the account. It took us 20 minutes to open the account of the fintech, whereas if you go to a traditional bank, it can take you 2 weeks, which is better than 3 months. So you see that the central bank is concerned with the role of the incumbents, wants to foster competition, and is creating those small regulatory changes to promote the role of the fintech. There is only one point, and I will finalize my answer now. It's still, it takes about 6 to 8 months for a credit fintech to have the approval from the central bank. So that can, that deserves some improvement. It's better than what we had 3 years ago. We took about 1 or 2 years. It's better, but I think there's some room for improvement here as well. Thank you.
Thank you very much, Mauricio. I think the next question from ICC is for Sohini. I think the question is that given the critical factor of remittance in sustaining a number of developing countries, whether Western Union will consider lower the remittance charges, especially for the vulnerable players.
It is a great question, and I think it's important for all businesses at all times to come up and support the communities. And at Western Union, we firmly believe in supporting the communities that we serve. So I'm happy to share that way back in January, actually, when this had just started, the pandemic had just started, one of the first things we did was announced a zero fee to encourage our customers who wanted to send money to bank accounts in China. Because of the lockdown, obviously they could not go and get the cash. And we've historically responded every time there's been a natural disaster. This is obviously a worldwide pandemic, but whether there is hurricanes or floods or bushfires, Western Union has always responded to ensure that we help the communities that we serve and that we work for. So hopefully that answers the question.
Thank you, Sohini. I think we will do our last question before we go into the 15-minute off-record session. So the last question is about the, what do you think about China launching central bank digital currency? I think I will go with Martin first and then Laura.
Sure, so it's definitely a big deal. China wants to be at the forefront of blockchain and digital currency. Because the experience of the past few years has been when they're behind, they often have to have something threatening to get out of control, like Bitcoin becoming a potential parallel currency within the country, or the massive boom in ICOs, which put a lot of people's savings at risk. So instead, they want to harness that technology for their own use. I think that they're one of the most advanced central banks in the world on this issue. And one of the reasons that they want to do it is this interoperability question. There's a sense that currently cash has disappeared, so people are not using the free payment system that cash allows, and which does not create a data trail. So there's a sense in which you're going to get a little more anonymity from a CBDC, at least when it comes to the tech companies, probably not for the government. And it would give them a lot more tools for monetary policy and other monitoring, some of which might be done by non-PBOC actors, and that becomes quite interesting. Of course, they're being very cautious about it. I don't think that that they're going to rush to implement at this point, but I would expect that they're going to be one of the first central banks in the world to launch one. And what that will do is that everybody else in the world will be interested in how China did it and what they did, and it will allow, hopefully, for more interoperability between central bank digital currencies and put them in a leading position. Something to watch going forward.
So CBDC is a really exciting topic. At Zenfree, we are currently advising some central banks on the topic, and it's probably one of my favorites. Many people speak about CBDC and compare it to cryptocurrencies or to mobile money because central bank digital currency, it's digital. But if we want to compare it to something, we should compare it to cash probably, because the interesting thing about CBDC is that it's fiat currency. It's backed by the central bank. So it's the idea that it's a trustful currency that people can transact seamlessly with the system. And as Martin was mentioning, there's a number of benefits that are thought to come with CBDC. One is on enhanced monetary policy, but there's many others, especially in terms of the efficiency of the payment system. There's the interoperability issue. There's also the real-time payments, and the fact that you won't need a national switch that quickly becomes legacy, and that it's a very important in investment for many countries. Whereas you wouldn't need that in a CBDC environment. There's the cash reticulation aspect that can be solved as well if the central bank can digitally locate cash where it's most needed. But as Martin was mentioning before as well, it's a systemic issue, so we don't need to rush. And what I would say is that it would be quite important to explore within a given jurisdiction in each of the countries which could be the potential use cases, like what is the real need for any country to go into CBDC. For example, if you think about the Seychelles Islands or the Philippines, you can easily think about cash reticulation and how it can improve moving cash around islands, for example. But if this may be totally different to the use case other country may have. And also, I think it would be quite important to be able to conduct a diagnostic to understand whether the country is actually ready in terms of infrastructure and regulatory framework, because you don't want to make any step into something that is so systemic to the country and to the economy. So I think we will see that. I think many people don't realize that that may be the future of currency, and it's not about yes or not will it happen, but rather when will it happen. And I would only advise to do it like reasonably, like take your time at least to assess the implications and start pilot testing before making a big move, which is most probably what China would also do.
Thank you very much, Martin and Laura. I think I just want to remind everyone that we do have a publication on CBDC from the World Economic Forum by Ashley Lundquist. So hopefully you can check it out after this session. So right now, I think we will conclude the official session, the recorded session of the this panel. And we recommend you to stay for a off-record discussion with our panelists. Again, I want to thank all the panelists and for the wonderful discussion. And I also want to thank everyone to coming and participate in the panel, and especially to our San Francisco team who got up very early today to put this together. And we encourage you to reach out to us. You can see our contact information on the screen right now. We hope that you can join our community to help us to shape the financial inclusion toolkit. Thank you.